Okay, well, Adrian Mowat is now joining us. He's an investor at Hong Kong SAR. Adrian, good to have you with us here. Good morning. Appreciate your time here. You know, I just want to quickly start with what's happening here this morning, actually what happened overnight, which is the big fall in the Japanese yen. You know, we are at 151.5 or so. And looking at what the Bank of Japan said yesterday, it kind of ended this yield curve control without actually saying it. So one would have thought that that perhaps is, is hawkish, right? It's good for the currency. The currency has gone the other way. So what's going on?
Yeah, so I think the problem was this. The statement was, I would say, ambiguous, and we're not clear exactly, are they ending the yield curve control? I mean, are they willing to let the long end of the bond market move meaningfully higher? And even if they did, the interest rate differential, Japanese yen versus euro or US dollar, will still very much favor the US dollar or the euro. I mean, I'm very much of the camp that the BOJ will want to remain relatively dovish. Historically, the big mistake they're deemed to have made was in the 1990s, when they tightened monetary policy into a deflating economy and set it up for multi-decades of nominal decline in GDP. The fact that they now have inflation above their target is great, but I think they should give themselves a bit more time for those inflation expectations to get embedded. And that is going to take time after, you know, you've got a generation that knows nothing but deflation.
Adrian, hi, good morning. So what is your own expectation from the US Fed later this evening? Of course, there is an expectation that they won't move on rates, but given the way the US bond deal is shaped up, it's almost at 5%. What would your expectation be as far as the commentary goes?
Yes, so I would expect them to be on hold in terms of Fed funds rates. And I would expect some commentary looking at the tightening effect of the move in bond yields, which were below 4% in July to near 5% today. So expect them to be on hold, even though the high-frequency economic data, particularly the third quarter GDP numbers, which were extraordinarily strong, particularly in terms of nominal GDP, could give them a reason to raise short rates. But I think because of what's been happening at the long end, the almost end in the inversion in the yield curve will make them pause. But it's a pause, you know, if the data continues to remain robust and the impact of higher long rates isn't seen to be slowing down activity, then the Fed may move at a subsequent meeting. And I do think there is this risk that expectations around Fed cuts in 2024 are probably going to prove to be too optimistic.
All right. Hi, Adrian. Good morning. How do you view the Indian markets, though? You know, we have been resilient, Teflon coated, so to call it, as my colleague Prashant keeps saying. But how do we go from here? Earnings growth is something that we offer. Valuation's pretty much in line.
Yes, but the Indian market has performed well, particularly in local currency, and it was performing well as the US market was up until July. Since July, we've had a big increase in US bond yields and a strengthening in the US dollar, and you've seen the Indian market correct in line with major markets like the US market. I think for the Indian market to start to make progress again, we're going to have to go back to this discussion about US bond yields. I'm more comfortable with US bonds around 5%. I think that's a sensible sort of neutral long-term value for US bonds. So maybe they will break through 5, but the risk is obviously much lower than it was in July when they were below 4%. But I would follow the US bond market, see if bonds can avoid breaking above 5%. And if we get that comfort over the next month or so, then I think you start to add to risk assets, and that would include the Indian market. But for now, I'd be cautious. I'm a bit nervous about what's going on in the bank index in India. It does look quite weak. And obviously, as a near cyclical, financials are quite an important signal. So again, if I was thinking more technically, I'd like to see the Nifty Bank Index sort of hold these levels. But at the moment, that actually does look that looks technically pretty weak. And then when you go and look at the fundamentals, there have been negative earnings revisions in the banks. So you've got what looks like quite a tricky stock picking market. You did highlight the L&T numbers, and the market is definitely rewarding companies that are beating expectations. But we've got some big sectors in the Indian market that are not beating expectations. And obviously that's a bit of a drag.
All right, we leave it at that. Adrian, thanks a lot for joining in. L&T, by the way, has also rallied 40% this year, right? So perhaps the street was already factoring in a very strong set of earnings. But let's see how the street reacts today. It would be interesting given the kind of rally that the stock has seen.